Biden and Donald Trump hold rallies ahead of a critical runoff election that will decide which party controls the Senate. And OPEC Plus talks are temporarily suspended after disagreement over raising output. Discussions resume today. Oil extends losses. Matt?
Let's take a look at European futures. They have moved sharply lower ahead of the open. We do see FTSE futures down about 0.8% as lockdown measures will be tightened pretty drastically, I would say. European futures are following them down as we expect our drastic lockdowns to be extended. Let's take a look at the GMM as markets open up. The global macro movers screen shows you in the left-hand column the cash trade, and the FTSE is typically the first out of the gate, as it is today as well, only down 0.1%. I say only because futures were down much further, and we could see those losses accelerate. The IBEX in Madrid is off 0.7%, and we do indeed see the FTSE losses getting steeper here, now more than 1/3%. The CAC 40 opens in Paris down 0.5% right now. They've had real problems with the vaccine rollout there. It would be, I think, fascinating to know how they've managed to vaccinate so few people. It seems like an effort to do as little as the French have done. So we do see European markets opening up lower. That's amid concern the escalating pandemic is going to crimp a nascent economic recovery. In the UK, as we said, Boris Johnson imposed a third lockdown across England, shutting schools and ordering people to stay home for at least 23 hours a day. Joining us now is Ludovic Subran, Allianz chief economist. Ludovic, what does this do for the economy? I mean, this scenario reminds me of, minimum security federal prisons in the U.S., the kind you get for insider trading. You've got a whole country, including the kids, that are not allowed to leave their homes for more than an hour a day. How bad is that for the economy?
This is as bad as a 3% contraction for the UK economy. So this is really bad. This is bad because the UK is a service economy. So it's all about, shutting down services. And it's bad because, things like schools are actually, big parts of the GDP of a country. Also because they play a role in how much parents are able to go to work. This is quite a drastic measure by the UK. And this is quite a negative outcome for the UK economy, and certainly this pales, in comparison with Brexit, or Brexit pales in comparison with what the virus is doing to the economy right now.
Ludovic, good morning. What is your rule of thumb when you look at school closures and you think about the impact on an economy, and we might see this applying in other parts of Europe as we go through this winter as well? What is your rule of thumb for what kind of impact shutting down schools has economically?
So if we look at the first lockdown, where we had several countries, so back in March, April 2020, when we had several countries actually shutting down schools, but we also had in the US, a second wave of school closure, in different states. We know that it's costing between 15 and 30% of the GDP. 15 because of what it plays in the, government spending of an economy, and 30, depending on how much of a constraint it is for people to go to work because you have to care for the kids at home. And unfortunately, it's not usually only the school that close. You have all these other limitation that actually play, and that's where you get to 20, 30% of activity total, so a drop by 70 or 80% of activity.
So we've all embraced with this pandemic the magic money tree, Ludovic. Governments just borrow as much as they want because rates are low, and then spend it, like water from a fire hose. How long can that last? Are you concerned about any Western governments' debt levels?
I'm not concerned about debt. I'm not concerned about a liquidity crisis in Europe, for example. I'm not concerned about solvency, of a state. I'm concerned about the other inequalities that nobody talk about. I'm concerned about the sacrificed youth. I'm concerned about, some emerging markets where debt levels and certainly reimbursement of primary deficits will be very, very high in 2021. For Europe, the US, I think it is quite concerning to have 20, 30 percentage point additional of COVID-19 related debt for the public sector. But just remember about corporate debt, where I think the biggest issue is because some of these corporates won't be bailed out in the end, right? So the issue is there, but it's an issue for 2023, 2024, 2025 at best. Politically, we've decided to postpone this issue, to procrastinate dealing with debt. It's going to cause a lot of issues politically in Europe with the fiscal rules. It's going to be certainly, the crux of the discussion about monetary and fiscal policy coordination as the ECB exits the strategic review. We see in the US that the choice has been made already for the Fed to actually anchor low rates for quite long with the average inflation targeting, and for President Biden to suddenly announce a new fiscal package. So we know we're going to live with these debt levels for quite some time, but I don't think it is the issue right now. It is a political issue, but the bigger short-term issue is corporate debt levels and the debt sustainability of some countries that don't have the luxury of having exorbitant privilege from the currency like the US or Europe has.
And Ludovic, what's the path to recovery going to look like during 2021 for European economies? How much certainty do you have around the European recovery story, given the way that the first quarter has already started a little worse than perhaps some had anticipated, and certainly with some big uncertainties attached?
Well, as you can see, the big issue is the stringency of the lockdowns in European economies, the fact that there is a lot of entropy. European economies are on very different pathways because of the variant, the VOC 2012, the UK variant, because of the vaccination campaigns. Matt, it was not nice to make fun of the French. I know we're very bad at vaccinating right now, but that's because we have a very strong state, right? The weak state is strong state. No, but so the vaccination campaigns are going in very different directions, and the structures of the economies are being revealed. So if you're a service economy, if you're a tourism-related economy, if you're France or Spain, you're going to have a very bad Q1. If you're an industry, a manufacturing-related economy like Italy or Germany, it may not be that bad, but of course, a big lockdown like what was announced in Germany yesterday could actually derail growth in Q1. So we think that it will get worse before it get better in Europe. We will all have a very wonderful Q2 just because of the sheer base effect. So people will have quite a cognitive dissonance with what's going to happen in Q2 because it's going to be so good in spite of the situation. But Q1 is going to be difficult, and we see confidence is the key. For France, for example, if we go back to pre-crisis confidence level, which doesn't look likely, we could gain as much as 10 billion of additional consumption. So consumption and investment cycle is what we should look for. And we expect in our scenario at Allianz that we will see that for H2 2021. So H1 is indeed quite a limbo.
So we were talking with a pretty cool cat from Phoenix, Arizona, Ludovic, Cole Smead. And he was saying, I guess he heard it from Charlie Munger at Berkshire, that by the end of 2021, it's not going to matter that France only vaccinated 512 people by January 3rd. These beginning steps are just the minutia. Do you see that as true economically as well? It's not going to matter the inequality between different European countries, governments' efforts to vaccinate their people by the end of the year?
I agree with that, but the problem is, the steepness of the curve at the beginning of the vaccination campaign anchors credibility, confidence, political chutzpah. And right now, the problem is that we have elections in Germany at the end of 2021, in France in 2022, and whatever is going to be played right now is going to be a big determinant of what comes out of the elections coming up in Europe by the end of the year. So it's not bad in terms of, even though I think it does cost life, personally, because, there are some people that will get vaccinated in June or July or September and that may die of COVID in March or April. So it's not completely a minutia. But economically, it's true that we should get to herd immunity or something close to herd immunity by the second half of 2021 for those major economies. The big questions that nobody has answers for right now is how do businesses react to this? What type of certification do you need to travel? Will we see some conditionalities related to vaccine or having had COVID when it comes to traveling to Asia? Will we see some conditionalities of being vaccinated or having, got COVID to going to a restaurant? If that plays in, the initial conditions of these vaccines actually do matter a lot. But I think the bigger issue for me is how much it weighs on the government credibility for action, because from vaccine to vaccination is a major logistical and distribution conundrum. And I think some countries are not doing it the way they should do it because, they get, for example, something that people don't understand, the choices that are being made between the UK and continental Europe, between vaccinating everybody or as many people as you can with the first dose or reserving the second dose is going to change massively the speed to which you get to 60-70% of the population vaccinated. And it certainly will change also the consent to getting vaccinated. And I think that's really where the crux is. So I hope it won't change much by the end of the year. But in between, this creates a lot of volatility and entropy in Europe.
Yeah, Ludovic, it's a marathon, but not a sprint, but it is setting a tone, as you point out. Frankly, though, what you point out as some interesting developments to come, the way that we lift these measures, that seems like a nice problem to have right now, doesn't it? Thinking about the way we might lift these measures, the way we might use immunity and how influential that'll be on our ability to travel around. Ludovic, stay with us. Ludovic Subran, Allianz Chief Economist, thank you very much. And stay with us here on the programme. 10 minutes into the European trading session. Coming up, the CSI 300 in China. That index has pushed above its 2015 peak, closing at a 13-year high. We'll find out why Ludovic Subran is bullish on China. This is Bloomberg. welcome back to the European Market Open. 13 minutes into a trading session that we've seen actually a bit of a deterioration coming through in US futures. So we'll keep an eye on that as we've gone through the European session. Now, Chinese stocks, though, the benchmark index in China has closed above its 2015 bubble peak. It marks a recovery from one of the country's worst equity crashes. The CSI 300 has surged more than 50% since a low in March last year. Ludovic Subran, Allianz chief economist, is still with us. Ludovic, give us your take on China. Just how much conviction do you have around China? And if you think about risks attached to China, is it debt overhang or is it actually dealing with environmental issues? What is the big risk there?
So China has leapt forward massively. I think China has gained 5 to 7 years of growth out of this crisis. If you look at the content of global imports, Chinese imports jumped from 17 to 26%. If you look at, global investment flows, if you look at the renminbi, the appreciation of the renminbi, it's quite fascinating to see how much China, being first in, first out, and managing this situation with individualized quarantine and very different lockdown strategies, I would say, has, massively leapt forward. So for us, and also the second thing is we were talking about, fiscal dominance and the coordination between fiscal and monetary. Everybody is playing Chinese games now, but the Chinese are the best at these games. They've been subsidizing the economy heavily for years. They have industrial policy in place. They know exactly how to do, managing a private-public partnership between, in the economy between companies and banks and policymakers. So we are quite bullish on China with the risk of zombification rising. I think SOE, state-owned enterprises in China, are leading the recovery, and we know that China has not hesitated in 2016 to let go of some of these SOEs that were not good enough for productivity and growth. The other issue that we see is the dual circulation strategy and the limitation to this when it comes to creating maybe a Minsky moment in China. The risk that we could have a form of financial crisis in China is still quite likely, in our opinion. And the last risk that we see is the risk that China could be somehow in a vortex of growth. What I mean by this is China has decided to invest massively in Southeast Asia, to maybe divest from other regions of the world, but we don't know how sustainable this choice is because China is such a big country that, they are potentially limiting growth by focusing only when it comes to exports, investments, strategies of partnership on the Asian continent because of the anti-China sentiment in Europe and the US. So we don't know how sustainable growth and this edge is if China is stuck in its catchment area, which is Southeast Asia.
Are you worried, Ludovic, that as an investor in China, you're subject to the whims, the regulatory whims and changes of the Communist Party? I mean, I saw a story today about JP Morgan looking to expand its wealth management business in China, which sounds like a great idea. It's going to be a massive industry for sure. But then I thought, oh, Ant was going to get into wealth management big time too. And all of a sudden, it's not. In fact, it's being crushed by the Communist Party. So isn't that a concern that you have doing business there?
Well, it's a concern across the world with the big return of the state Leviathan. Everywhere I see the risk of regulatory backlash because I see, the state over-welcoming their stay, in a series of sectors. I don't know what is the price of an airline ticket right now, if you ask me. So I see these whims of regulators and policymakers everywhere. So I wouldn't pinpoint or finger point the Chinese. But to your point, the big issue on wealth management and asset management and investment in China is that the Chinese authorities have actually matured a lot, and the CIROS, the regulator, is very interested in asset liability management, in value for the shareholder, for the client, in risk management, much more than before. So we, for example, as a European insurer and investor, when we work with the Chinese, we bring in a lot of experience of having gone through Solvency II and having gone through a series of crises that help us manage, the financial frame better for our customers, for our shareholder, for the people that trust us with their money. So I think that's what the Chinese are looking for. So it's true the regulatory situation is hard to navigate, is tight, but it's all about bringing higher value and lessening the risks. And I think this is something that we see growing as a concern for China because of social stability and because also of the role that the financial sector is playing that is growing bigger, and the need for China to control better the risks attained to this financial sector. Because as I said, there is a risk scenario of a financial crisis in China, and so the regulators couldn't be blamed for that. And that's why, when it comes to competition policy, regulatory policy, etc., they're becoming very, very, they're scrutinizing actors much more, and they're making it harder. But as long as it is for higher value for the customer, I think it is a good move.
And Ludovic, when we think about Europe and the extent it wants to leverage relationships with China, what assumptions are you making there? Because for many years it seemed like quite a no-brainer that European governments were going to go out and court China and court emerging Asia. And under the presidency of President Trump, that's looked a more difficult tightrope to walk. Now we move to a Biden era. Some things change, some things don't. So how do you see the Europe-China relationship playing out so that Europe can benefit from these positives in China that you describe?
Well, I guess, I'm not very concerned about we've seen articles about the EU-China investment deal being a big gift to China. I don't believe in this type of story. I think, we can get much closer to China than we are right now. We need a foreign and economic policy to do so, because right now we have very different relationships with China across European countries, which leads to very different interests, from panda bonds in Portugal, direct investment in Italy, to trade partnership with Germany. So the question here is, we need to strengthen our relationship with China. We need to make sure that companies across Europe find new outlets in China. We need to make sure that we benefit from the interest of Chinese investors into Europe. The question is, how do we do that when we have built such a strong anti-China sentiment? I, for example, think that China is quite advanced when it comes to environmental policies and ESG approach than we think. So there is a lot of misconceptions about what China really is about and how we can work with China. And so I think it's up to us to find these common grounds and grow the pie, because it is all about growing the pie. Otherwise, we're going to have, strong fiscal and social dumping from Southeast Asian countries that are supplies to China, and we're going to have a big competition with, our own relocation and reshoring strategy that may not actually work as well if we don't have Chinese customers to buy those products that will be manufactured in Europe.
Ludovic, it's been great to spend some time with you. Thanks so much for joining us this morning. We wish you and yours a happy new year as well. Health and prosperity. Ludovic Subran, Allianz chief economist there. He's going to be continuing the conversation with Anna and myself on Bloomberg Radio at 9 a.m. UK time. So if you're near a DAB digital radio, go ahead and tune in to Bloomberg. Coming up, a new mega car maker, Fiat Chrysler, is formally merging its business with the French auto group PSA, which makes Peugeot and Citroën. We'll talk about that and what to expect from it. This is Bloomberg. Fiat Chrysler is going to formally merge with French auto group PSA later this month after shareholders approved the plan yesterday. The company will be called Stellantis, which is weird, but it will become the fourth biggest car maker in the world. Joining us now is Bloomberg's European auto team leader, Craig Trudell. Craig, I think this is such a cool story because there's so many brands now that are so spread out. You know, you can't buy a Peugeot or a Renault in America. You can't get a Ram truck here in Europe. They're all over the place, but they've got this superstar CEO. What do we expect from Carlos Tavares?
Yeah, so Tavares has done some really interesting things at PSA and given people like you reason to be excited about what's going to happen with this combined company, because you look at what he's done at PSA. It was a company that was really struggling when he took over as CEO. He actually left Renault and was reporting to Carlos Ghosn actually before he joined PSA. And the job he's done turning that company around a few years ago, acquiring Opel and Vauxhall from GM and doing what GM wasn't able to do for decades, which is actually make money with those brands. This is, to your point, going to be a huge house of brands. It's going to be challenging to kind of, have all those mouths to feed, but it's sort of interesting to watch, just how many of them survive after this or whether they do some consolidation.
Craig, thanks so much. Craig Trudell there on Stellantis.
Welcome back to the European market open. 30 minutes into a trading day here in Europe this Tuesday. It's already been quite volatile. In terms of where the equity markets are, Stock 600 up by 0.1% right now. The FTSE 100 getting some better gains. The IBEX fairly flat. But essentially, we are making modest gains here in Europe. That is despite futures that suggested we'll have to catch up with the losses yesterday in the United States. And with that in mind, US futures have been volatile overnight as well. They were down a few tenths of a percent. Now they're up 0.3% in the case of E-mini futures. So some volatility in these markets as we get started for real on 2021. Let's get a Bloomberg First Word News update for you. Some of the top stories we're covering this morning at Bloomberg. England is entering its third lockdown, shutting schools and forcing people to stay at home. The measures will last until at least February 15th. Prime Minister Boris Johnson is pinning hopes for a recovery on rolling out a vaccine. He wants to deliver 2 million shots a week, hoping to vaccinate nearly 14 million by mid-February. The New York Stock Exchange is scrapping plans to delist the shares of China's biggest state-owned telecoms companies. The U-turn comes just 4 days after the exchange said it would remove shares of China Mobile, China Telecom and China Unicom to comply with an executive order. The US Food and Drug Administration, the FDA, says any changes to the dosing or scheduling of COVID-19 vaccines is premature. Commissioner Stephen Hahn says the agency has been following discussions about reducing the dosage or extending the time period between doses in order to vaccinate more people. But he says there isn't any data to support a change. Global news 24 hours a day, on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. Matt?
All right, so both Joe Biden and Donald Trump have held rallies in Georgia. It's huge, obviously, this election coming up. The Senate runoff elections that will decide not only control of that body, but really control of the U.S. The president revisited his claims that voting fraud robbed him of re-election, while his successor-to-be said the country is looking to Georgia to help him implement his progressive agenda.
We need you to vote again in record numbers, to make your voices heard again and again, to change Georgia, to change America again. And this is not an exaggeration. Georgia, the whole nation is looking to you to lead us forward for real. You know it.
The two seats up for grabs will decide who controls the Senate, and limited polling shows that while both races are very tight, the Democrats hold narrow leads. Joining us now is Bloomberg's reporter Stephanie Baker. So, you know, what's the likely outcome? Polling, we know we can't rely on polling that much these days, and the Democrats don't have really a history of turning up for elections like this.
No, they don't, but there's a lot of reasons why this time might be different. As you said, the polling averages do indicate that the Democrats, John Ossoff and Raphael Warnock, have a slight lead of a couple percentage points. You know, it's too tight to call at this point, but it's worth noting that the polls in Georgia for the November election were fairly accurate, and I think this has taken on national significance. Turnout appears to be high with you know, mail-in voting and early voting as well, particularly in those you know, Democrat-dominated counties like Fulton County, and turnout amongst African Americans appears to be high. So I think it's really all about a turnout game at this point, and you know, whether or not Democrats can really drive their voters out while Trump continues to argue that the election is rigged. How does he turn out Republicans if he keeps hammering that narrative that the voting process has been compromised? I think that's really what we're seeing play out.
Stephanie, good morning. How important is all this then for Joe Biden's presidency? If he does win Georgia, sure, he gets control of the Senate. Will it be precarious control, and will that matter to his ability to deliver on his agenda? And if he doesn't win, of course, that will have implications.
Yeah, I think it's hard to overstate how important this is. I mean, Democrats haven't controlled the Senate since 2014, you know, and if they lose these two races or even just one, it means that Joe Biden would be the first president to start his term under a divided government since 1989. I mean, it will determine the course of, legislation that he's able to pass on everything from tax to spending, to a lot of long-term reforms that, I think that the Democrats wanted to push through, including, some in the Democratic Party getting rid of dismantling the filibuster. So I think it's an incredibly important election. It will be precarious, obviously, especially because the Democrat majority in the House has slimmed down considerably. Even if they do win these two seats, it just means that they have control of the Senate with Kamala Harris, the vice president, casting the deciding vote. And as you know, Democratic senators are of various stripes from, states that have a lot of sort of red, Republican voters and have to toe the line to, much more progressive states. So it is not a uniform group by any means, but it will, really transform Biden's presidency and his ability to maneuver and really, set his agenda and get some of his legislation passed.
All right, we'll look forward to getting the results. These aren't results that we're going to get right away, are they, Stephanie? I mean, this could take days or weeks to determine the winners.
Exactly. I mean, if it's a decisive win, we should know tonight, but most pollsters are expecting this to be tight and that it could take days to count to make sure that the results are accurate. And, we could be facing additional challenges, court challenges, legal challenges that could, drag this out for weeks, if not months.
All right, Stephanie, thanks so much for joining us on this. Bloomberg's Stephanie Baker talking to us about these critical Georgia runoff elections. Now, OPEC and its allies are going to meet again later today to try and resolve an impasse on production. Talks will go into a second day after most members, including Saudi Arabia, opposed Russia's proposal for another output increase in February, with Prince Abdul Aziz bin Salman warning of a new risk to the market.
That the risk of being seen as a killjoy in the proceedings, I want to urge caution. The new variant of the
Morning, everybody. I'm going to place an order to sell short euro. The price I'm looking 124.67.7. 122.67.7. Just right here. Let's see how long I have to wait. Oh, it looked like it moved. It moved very fast, yeah, down. Let's see what's going to happen after this candle. I'm still waiting for the price to reach this level. I'm still waiting for the price to reach this level, 122.67.7. Okay, as you can see, it reached the level, so we sold short euro at this price. Opened new position.
Welcome back to the European Market Open. We are 42 minutes into a trading session that shows European equity markets making modest gains. The Stock 600 hides a multitude of divergence, but up by 0.1%. The FTSE 100 up 0.5%. The CAC and the IBEX underperformed this morning. Now, Brexit is pushing most European equity trading away from the UK. The three biggest venues handling European shares in London have seen almost all their business shift to the EU. That's as talks continue over the City of London being granted equivalence. Joining us now is Miles Chelich, the City UK's CEO. Miles, really good to speak to you. Happy New Year to you. And we should make clear we're talking about continental European share trading when we say European in that context. And it does seem, we spoke to the boss of one share trading platform yesterday, that was the Aquis Exchange. He said Europe has clearly won the battle for its own share trading. Is this business lost from the City forever now, Miles?
Well, I think the first thing is that this was all fully expected. The regulators, the officials on both sides, industry have worked together for some time to put this in place. As we've talked about before on previous occasions, the industry in the UK, in fact, the industry in Europe overall has long hoped for a good deal, a good outcome on financial services, but it's prepared for a hard Brexit. It's had to. And the regulators and industry and government have been very responsible in doing that. And I think what we've had is a smooth transition to the situation that we're in, that we're seeing at the moment.
I'm also placing an order to sell short Japanese yen. 102.930, and that's it. 102.930. Position opened at this level.
Paris right now. He said Europe has clearly won the battle for its own share trading, and he called the shift a spectacular own goal as Britain is now losing its very strong position in trading of European equities in London. Could you have stopped this? I mean, was this a failure on the part of the British government?
So I think where we are is that for a long time, firstly, the focus on the talks has been on goods. So when the Article 50 process was triggered, phase one of the talks were around the so-called divorce bill. They were around citizens' rights. They were around the Northern Irish border. So there's been this focus on goods. We've ended up with a free trade agreement. And free trade agreements, by their nature, historically have tended to focus on goods. There's been less on services, despite the growth in services, both as part of the UK and EU economies. 80% of the British economy, 70% of the EU economy, and the growth of services and trade. So financial services specifically, if you look at the political declaration, both the original political declaration in 2018, the subsequent revised version of the political declaration, financial services were not a major feature of the PD, and the focus in the PD was on regulatory autonomy. And if that's where we've ended up, and obviously it is, and if that was where the talks were heading, then the situation that we're in, it was absolutely right for regulators, industry, and government to prepare for. So this is obviously fragmentation in markets, additional friction, borders are not welcome. It is not what our industry wants to see, and it's not in the interests of customers ultimately. But given where we are, the way that this has been run, I think it is absolutely right to congratulate the efforts that the regulators, supervisors, and industry and governments on both sides have put into this.
Yeah, we've certainly seen a smooth change taking place, I suppose, haven't we, Miles? But in terms of where we head here, is equivalence something that you still think would be a benefit, or should we put aside thoughts of equivalence and think of regulatory divergence as bringing opportunity instead? What's the view at the City UK?
So we've welcomed the joint declaration on financial services that was announced just before Christmas. It talks about structured regulatory cooperation between the UK and the EU. And that's very welcome. It's something we've been calling for the joint declaration. It's important that there's a relationship that is built on trust, that is built on mutual respect, that obviously the regulators on both sides know each other. They built the acquis, the current body of EU regulation together. The UK was a leading voice on that. But as we go forward, we think it's very useful to have a structure to ensure that transparency of decision-making on both sides. I think we need to be really clear what this doesn't appear to be, or certainly at this stage doesn't appear to be, which is a mechanism for managing equivalence on both sides. So equivalence is a unilateral decision on the UK side and a unilateral decision on the EU side. But it is important that there is a flow of information as those processes go forward. The UK did absolutely the right thing last year in granting unilateral equivalence for the UK. It would have been extremely welcome for the EU to have done the same. Ultimately, the body of laws on both sides are currently identical. Will they diverge over time? There is an inevitability that there will be divergence as new regulations come in, and that won't just be on the UK side, it will be on the EU side. And we're seeing reviews of Solvency II that are happening, the key insurance regulation, again, on both sides of the channel. And as the industry adapts and the industry changes in the years ahead, and things such as fintech, AI, data become much more important, it may well be that the UK and the EU will take differing approaches on that. But by having mechanisms in place to ensure ongoing dialogue, ongoing visibility, ongoing exchanges between regulators, hopefully we can manage that process as we go forward. And I think the other key thing here is that both sides continue to be committed, as far as we can tell, to high standards in financial services. And I think that's a commonality that we can build on.
Miles, so you think that's a commonality you can build on, but how do you actually make sure that that memorandum on financial services leads to something rather than just kind words?
So I think that's a really important point. So we've got out of the EU with avoiding an acrimonious exit. So there was always the risk that no deal would bring the sort of acrimony, political acrimony that would have a knock-on effect in commercial terms, a knock-on effect in financial services, and a knock-on effect in terms of the ability to trade between both blocks. So having the deal in place, even if there's not a huge amount on financial services at this stage, gives us a platform to build on. And things such as the structured regulatory cooperation agreement that we hope can be secured by spring, which is the current timescale, provides that platform. This is going to take time. It's going to take ongoing discussions and interaction between governments, between regulators, and between industry. But already when we talk to our counterparts in industry in the EU, there's a huge degree of interest in how we can cooperate together on shared areas of interest and shared areas of concern. So the role of data, the role of fintech, international standards, the challenges and the opportunities of challenging climate change are all there as something that we can work on together. And I think there's shared interest in developing them in the months and years ahead as the
Well, we'll see how UK-EU cooperation goes after Brexit. Miles, thanks so much for joining us. Miles Chelik there, the Citi UK CEO, talking about the financial industry as it stands in London. Up next, we're going to hear from Israel's health minister. They've actually done a good job of rolling out the vaccine, maybe the best in the world. This is Bloomberg.
I do have to say that we got prepared in advance. Let's never forget that we are just a small country. It was quite clear for us along the way that once any company will have a vaccine, the ready vaccine with all the approvals, FDA and all the other international approvals, pardon me being so blunt, but they weren't even looking our direction. They will be looking for huge markets to sell the vaccine. So we signed our agreement several months ago when there was skeptic attitude towards the possibility to have a vaccine in the near future. And the next answer, or the real answer, would be our credible medical teams, the HMOs, that the moment we told them that the vaccine is available, in no time at all, they got prepared and they were out there.
What's the biggest logistical challenge in rolling this out?
The first one we encountered was the huge sets of about 1,000 doses we were unable to go to distant areas with smaller development towns or kibbutzim, all the small places. We introduced the Israeli technology with the approval of Pfizer of how to split the sets. We now can bring as little as 50 doses to some distant points. And this is probably part of the answer. Why is it going so fast? Were we to start with the policy of just having huge stadiums, everyone who wants to get vaccinated could come there. For elderly people, for the population at risk right now, this is much less possible than to cross 300 meters away from your home and get vaccinated in your local clinics.
That was Yuli Edelstein, Israel's health minister, speaking about the country's COVID-19 vaccination program, which has been, relative to other countries, a massive success globally. Let's talk about German unemployment. It fell by 37,000 in December. That's good news when unemployment falls. You don't want it to be too high, obviously. It was estimated to rise 10,000, so it's gone the other way and in the right direction. That's it for the European Open. Stay with Bloomberg Television. Up next, it's surveillance. Anna and I are headed over to radio to get more from Ludovic Subran of Allianz. Please join us. If you're in the city, you can tune in on London, DAB Digital Radio. Anywhere else in the world, you can just switch over. Google Bloomberg Radio and then listen live. This is Bloomberg.
winter of discontent, England goes back into a 6-week lockdown in an attempt to stop hospitals being overwhelmed. Georgia on my mind. Joe Biden and Donald Trump hold rallies ahead of a critical runoff election that will decide which party controls the Senate. And the New York Stock Exchange scraps plans to delist China's top telecoms in a big U-turn with little explanation. China Mobile among those sharply higher. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. The market's really taking stock of what's going on with the virus. The market also is taking stocks with what's happening in U.S. politics. Now, the big story to watch out for, I think, not only this month, but of course this year, is what happens to dollar. If you look at our markets today, European stocks are pretty much fluctuating. U.S. equity futures also fluctuating as traders weigh these concerns about the impact of rising coronavirus cases, but also brace for these key U.S. runoff elections. The dollar actually falling and gold holding on to Monday's gains. Now let's get straight to the Bloomberg First Word News. Here in London with me is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Saudi Arabia is reopening its land, air and sea borders with Qatar. The move eases a long-standing diplomatic rift as leaders in the region are set to meet for a key summit. It comes amid rising tensions in the Gulf. Iran has seized a South Korean flagged tanker hours before announcing it will ramp up nuclear enrichment. Most of OPEC members, including Saudi Arabia, are opposing Russia's proposal to hike supply. Discussions are continuing today to give the group more time to resolve its differences. It cast doubt on an increase of 500,000 barrels a day that the market had been expecting for February. Now crossing over to Europe, France is trying to make up for the slow start to its vaccination program. After criticism from doctors and opposition politicians, the nation's health minister says several thousand people were given the jab on Monday. That's up from over 500 as of the 1st of January. He says 1 million doses will be available by the end of the week. And the U.S. Food and Drug Administration says any changes to the dosing or scheduling of COVID-19 vaccines is indeed premature. Commissioner Stephen Hahn says the agency has been following discussions about reducing the dosage or extending the time periods between doses in order to vaccinate even more people. But he says there isn't any data yet to support a change. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, we're getting the Chancellor of the Exchequer here in the UK announcing more support for business in the pandemic. This is, of course, after yesterday, the UK announced a national lockdown that will last, including the closure of schools, until mid-February. Now, the Chancellor of the Exchequer, Rishi Sunak, announcing some £4.6 billion in new lockdown grants. If you break it down, it basically means that businesses in retail, hospitality and leisure sectors are to receive a one-off grant worth up to £9,000. Now, I don't know how long that is for, or if you have a business in London, for example, in central London, where you still have to pay rent, and we're seeing some relief for rents, but not from every company. The £9,000, I'm not sure, goes a long way, but that's what we know so far. Now, let's get to our to continuing with our top story. In England, entering this third national lockdown as COVID cases surge amid dire warnings that the National Health Service is at breaking point.
You may only leave home for limited reasons permitted in law, such as to shop for essentials, to work if you absolutely cannot work from home, to exercise, to seek medical assistance, such as getting a COVID test, or to escape domestic abuse. Primary schools, secondary schools, and colleges across England must move to remote provision from tomorrow.
Well, Boris Johnson.
Okay, ladies and gentlemen, I'm going to place a stop on profit for Japanese yen at 102.910. Okay. See, it moved very fast, so probably I will move further my stop on profit. Let's wait and see. I'll put here. Okay, stop. Let's wait. We're already in profit, £200
are here now, and it's absolutely necessary to have done it while we're rolling out vaccines. You do not want a rampant infection while vaccines are being rolled out, because then you give the virus a chance to mutate.
So what does that mean exactly, Sam? And I've heard this, from also a number of other virologists. You need to basically administer vaccines at a case where we were like over the summer, so where the R rate is very low, because otherwise there's a bigger chance of transmission. This is what you're saying. Do we know that if more people are vaccinated with the first dose, but then the second dose, we wait to give the second dose, does it protect the general population more than whether you do it as the vaccines were intended to be used?
Yeah, so unfortunately there, Francine, as you know, I'm not convinced that the data absolutely supports this long gap that the UK's vaccine advisory group has put forward. It is one way of doing it. You can find some evidence that supports it, but I would be more with the FDA saying use the vaccines as they're proven to work. And that's 3 weeks for the Pfizer-BioNTech and between 4 to 10 weeks for the AstraZeneca vaccine.
Sam, what can you tell us about the South African variant? This is the one that, really scares doctors because vaccines may not work against it.
Yeah, again, you remember we had the same discussion back in a few weeks ago when the new UK variant came up. We need data to show whether vaccines are or are not effective against these variants or any other variant that turns up. So the systems, I think, are in place to be able to study that. And again, it's something that absolutely has to happen in each country. You need the massive genomic analysis, something that the UK leads the world in, married with a constant analysis of the blood from people who've been vaccinated to prove that the vaccine is still effective.
Okay, we'll have to wait and see. Sam, thank you so much, as always, for your insight. Bloomberg Senior Pharmaceuticals Analyst and Director of Research for EMEA, Sam Fazeli. Now, joining us to talk about all of this and, of course, the impact on the economy, the impact on the UK economy, and some of the headlines we just had from Rishi Sunak about what he's doing in terms of grants to help businesses. We're joined by Simon French. He's Chief Economist at Panmure Gordon. Simon, always great to speak to you, so thank you so much for coming on. We just had some extra grants from Rishi Sunak. What's the situation exactly for the UK economy? 9,000, I think, for a lot of businesses such as hospitality and people that need it. Is it going to be enough?
Well, certainly this support package is focused at the smaller cap end of the spectrum. Publicly listed companies, large companies, are still expected to tap capital markets rather than direct government support. So that is the context behind a flat rate grant of this scale. It's to support small businesses who are unlikely over the next 2 months to be able to operate anywhere near to capacity. In terms of the economic impact, we expected a double-dip recession anyway. I think it was quite clear that even without the new variant of the vaccine, we were going to see heightened restrictions to effectively pay for the household mingling that took place over Christmas and New Year. That's just been accentuated and made more restrictive by these moves. So we're talking about what we think a 2% contraction quarter on quarter in Q4 2020 and a 5% contraction in Q1 2021. So quite a considerable downside. But of course, things then are very much hinging on the pace of that rollout and Sam's comments about whether we can hit that level of vaccine, 14 million by the middle of February. It's quite a big ask.
Simon, coupled with Brexit, what kind of forecast in terms of double-dip recession? Is it going to be worse than you thought it would be? Is there like a direct correlation with, 3 weeks of lockdown in Tier 5 and the impact it directly has on GDP?
Yeah, so for many of your viewers trying to keep pace with what seems weekly announcements, what is iterative versus what, if you step back, is the position of the UK economy. I think it's perhaps easier not to talk about the additive impacts of moving from Tier 4 in large parts of the UK to all of the UK, but look about where it leaves UK output compared to where it would be without COVID. Now, at the end of the third quarter, the UK economy was operating about 9.5% below its Q4 2019 levels. And I think that will go down to about 13, 14% below by the end of the first quarter of 2021, then it is really how quickly consumer demand, supported by relatively strong household balance sheets, can start to recover in the second half of the year and catch up with the rest of the G20, which ended Q3 2020 only 4% down. So the UK is more than double below where the rest of the G20 is when you mark to market.
Simon, overall, what actually happens to the economy longer term? Is there a danger that the government decides to go into austerity mode far too quickly? There was a brilliant piece also by the OECD chief economist saying, you know, the biggest mistake many countries could do is try and deal with debt too quickly.
It was an excellent piece, wasn't it? And I fully associate my comments with that. If you go back just over 10 years, fiscal policy and monetary policy were working against each other relatively quickly after the end of the global financial crisis. I think both economists and indeed the political cycle has evolved to a point where that is not possible this time around, either politically or recommended economically. We're going to see, and this is the upside of the crisis, is that the two big macroeconomic levers are going to work in tandem and should work in tandem until the recovery reaches exit velocity. And I point to what the Australians have done in terms of their forward guidance on fiscal policy. They have said they will not raise taxes or cut spending until unemployment is sustainably below 6%. I think that is the type of fiscal forward guidance we will see more of around the world if those comments from the OECD, which are very good, are adopted across the G20 and wider.
Thank you so much. Simon French there from Panmure Gordon stays with us, and we'll also talk about Georgia. Coming up, Election Day, the runoffs in Georgia today will decide who controls the Senate. Both Biden and Trump held rallies in a final attempt to sway voters. More on that next, and this is Bloomberg.
It is critically important that the markets stay open in this time as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
We need you to vote again in record numbers, to make your voices heard again and again, to change Georgia, to change America again. And this is not an exaggeration. Georgia, the whole nation is looking to you to lead us forward. For real, you know it.
If the liberal Democrats take the Senate and the White House, And they're not taking this White House. We're going to fight like hell, I'll tell you right now.
Well, both Joe Biden and Donald Trump held rallies in Georgia ahead of the critical Senate runoff elections today. Now, the president-elect promised more pandemic relief. Trump revisited his claims that voting fraud robbed him of a re-election. The two seats are up for grabs. We'll decide who controls the Senate. Well, still with us, Simon French for Panmure Gordon. Simon, I mean, difficult, frankly, as in a lot of elections, but especially this election, to go which way it goes. But this will really decide what Joe Biden can do in his election before he even gets to the White House.
That's right. It'll certainly determine the narrative. And clearly, if the Democrats win both those two seats in Georgia and the vice president then has the casting vote in a split Senate, it gives him potentially more wriggle room in terms of his policy agenda. But I don't think I'd overstate that. I think it's important we don't see this as a real threshold moment that could push through a radical Biden agenda. He still would have to take his party through with him just to get through to that casting vote struck by the VP. So anything towards the radical end of the spectrum that's going to lose, perhaps moderate Democrat support is going to be a struggle regardless of the outcome. But I think near-term markets are certainly looking, certainly on the sort of dollar trade, the shift out of dollars towards emerging markets. There's some real signals from this. There'll be market moving short-term, but probably from an economic standpoint, not as big as perhaps the headlines over the next 24, 48 hours.
Simon, what are you expecting from a Joe Biden presidency, and what kind of economy, again, will we have in 12, 24 months?
Okay, so from a domestic standpoint in the United States, I think there will be more of a focus on, the recovery of parts of the economy that have been neglected actually under successive Democrat and Republican administrations. We're hearing a lot more about unionized jobs, on industrial policy, that building back better. A lot of the stuff that perhaps since the Reagan administration has been sat in the background, but this now moves to the foreground. And then from an international investor standpoint, I think it's well understood that Joe Biden is going to reestablish much more of the multilateral relationships that have been put on the back burner by the Trump administration. And that really will fuel this movement and more confidence of investable funds moving out of US dollars as a safe haven and back into emerging markets where they see the opportunities of global trade getting a bit of a fillip from the Biden administration.
How much weaker, Simon, are you expecting the dollar to go?
Not much, actually. I think, if over a 12 months, 24-month view, I think the vast majority of the dollar weakness that we've seen is already played out. I actually don't think it will go much lower. The momentum clearly is on the side of that trade. Some of the factors I talked about, shift out of dollar into EM, will push that to the margin. But on the flip side, we will see a US recovery, both in terms of the economy and in terms of suppressing the virus, getting more control over that. And I think investors therefore will want to hedge their position by also want to be exposed to US domestic strength, fueled by that domestic agenda I was just talking about.
So what do you do with inflation, all of this, Simon? I was looking at some of the charts. Treasury inflation gauge there exceeded 2% for the first time since 2018. Now, I know this is over the next decade, but still, are we actually going to start the whites of inflation's eyes this year?
For me, this is a year of reflation, not inflation. There'll be some huge base effects. People looking at quarter-on-quarter, month-on-month, 3-month annualized averages of inflation will get scared a little bit by the prints. Don't be scared, I would say near term, because remember, just under a year ago, we were talking about a negative oil price. Therefore, simply the base effect of that a year on will lead to some quite big numbers. But the key for understanding Jerome Powell, the FOMC, central banks around the world's response to inflation is whether they think this is spreading into core wage inflation, will be sustained beyond the recovery, beyond the reflation trade. We don't see that. There is a split view amongst economists. Is one of the reasons why some of those hedges against deflation or big inflation, like gold, like Bitcoin, Bitcoin have been so well supported, but actually we don't see inflation sustainably picking up. We see much more base effects driving 2021 and policy to try and head off a sustained spiral in inflation, just unnecessary over the next 12, 24, indeed 36 months.
Simon, thank you so much. Simon French, sir, chief economist at Panmure Gordon. Now, coming up tonight, we'll, of course, have plenty more on the U.S. economy, and we'll have full coverage of the Georgia Senate runoffs. That's from 7 p.m. Eastern. That's midnight in London, and this is Bloomberg.
Okay, ladies and gentlemen, I'm going to move further my stop on profit for Japanese yen to 102.880. Okay, stop on profit move to this level.
This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Good morning, Francine. Gains from next over the holiday period will be almost entirely wiped out by the new national lockdown. The retailer expects a pre-tax profit of £370 million for the year, slightly above its previous forecast. It says that better performance has been helped by strong online demand. Supermarket Morrison says stronger revenue should offset the higher costs related to COVID-19. It is reporting a solid quarter and holiday period with a recent boost to online sales. Like rivals, Morrison's is benefiting from more people eating and working at home. And finally, some entertainment news. Period drama Bridgerton is on a pace to be one of the biggest hits Netflix has seen this year. The series is set to be watched by more than 60 million households in its first 4 weeks, making it the 5th largest debut of any show on Netflix. Even so, it's unlikely to top the Spanish crime series Money Heist or the documentary Tiger King as the most watched programs released in 2020. And that's your Bloomberg Business Flash. Francine.
Leanne, thank you so much. Now, coming up, more on Election Day. The runoffs in Georgia today will decide who controls the Senate, so it will actually decide what Joe Biden can do in his presidency before he even shows up in the White House. Both Joe Biden and Donald Trump held rallies in a final attempt to sway voters. We'll have, of course, plenty more on that. Now, if you look at the markets, they're still yet to make up their mind what to do with the lockdown in the UK. They still don't understand exactly what the rollout of the vaccine will look like. European stocks fluctuating, U.S. equity futures also fluctuating. Again, traders weighing concerns about the impact of the rising coronavirus cases, but also bracing for these key U.S. runoff elections. Two things I want to show you: gold holding on to gains yesterday and the dollar falling. We'll have plenty more on the markets. We'll have plenty more on politics shortly. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
I was actually poor.
No foreplay?
Eat your bag of Lay's with a smile on your face.
If all the diseases have been taken, I'll take a tax.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Frauti Lacqua. here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. UK Chancellor Rishi Sunak is rolling out £4.6 billion of new support to help businesses through the lockdown. Retail, hospitality and leisure companies will be entitled to a one-off grant of as much as £9,000. It adds to the $280 billion the government has pledged so far to support firms and workers. Now, the New York Stock Exchange is scrapping plans to delist the shares of China's biggest state-owned telecoms companies. The U-turn comes just 4 days after the exchange said it would remove shares of China Mobile, China Telecom and China Unicom to comply with an executive order. And Italy is extending some of its COVID-19 restrictions through mid-January. That includes a ban on people moving around Italy and a limit on household mixing. It is also changing the rules for classifying a region as higher risk. The extended measures come as Italy is struggling to speed up vaccinations. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Thank you so much, Leanne. Now, it's election day in Georgia. Both Donald Trump and Joe Biden had last-minute campaign rallies on the eve of a vote that will determine which party controls the Senate. The Republicans need to win just one of the two seats up for grabs to maintain their majority, and the Democrats need to win both seats. Well, joining us this morning is Leslie Vinjer-Murray, head of the U.S. and America's program at Chatham House. Leslie, good morning, first of all, and Happy New Year, but how tight will the race be in Georgia?
I think it will be very tight. Some of the most recent polls show both of the Democratic candidates up by a couple of points, but I think that, that is probably due in large part to the fact that a lot of Democratic voters continue to vote early. The polls are, tougher to be able to call this race, but I think it's going to be neck and neck. And as we've been hearing, it really is all about who turns out, and a lot of it will come down to who turns out today. The polls close at 7 o'clock. Voters can keep voting so long as they're in line by then. So it might be days before we know the result of this election. And as you know, Francine, people are going to be incredibly careful about the counting, given what we've seen in recent days from the president.
So, Leslie, given that there's so much spotlight on Georgia, are you expecting a record turnout, or is it just impossible to say? I know it depends on the weather and things like that, but what's your feeling on this? I mean, we saw, a record amount of people voting in the November election.
I do expect a very high turnout. We've already seen over 3 million voters. I think people understand. Locals in Georgia understand how high the stakes are for this election. The fact that President-elect Biden and President Trump have both been campaigning in the state. The message is loud and clear. The focus is on Georgia. And I think actually, there's been some concern amongst Republicans about whether the fact that President Trump has contested the legitimacy of the elections, whether that would depress turnout amongst Republican voters. I'm not persuaded of that. We're still hearing Republican voters saying that, they're frustrated, they're concerned, but they're going to turn out. The proof will be in the pudding. We can't know until after today. But I think there's so much focus on this race that we'll see a higher turnout than we would normally see in runoffs of this kind.
Leslie, I sometimes get accused of looking at U.S. politics with a foreign brain, but my foreign brain tells me that after listening to that phone call of President Trump with Georgian, the Georgian official saying that he needed to find more votes, that actually the Democrats have an advantage here. Am I wrong?
Georgia has not voted Democrat for senators in a couple of decades. We know that Stacey Abrams and many others have worked so hard to increase voter registration. That tends to go Democrat. We know that the suburbs have turned more Democrat, but it is a very Republican state. And the moderate middle of the Republican Party knows that President Trump will not be in power. It's not all about him after January 20th. They're looking ahead. They're concerned about the possibility of taxes being raised. And these votes will determine whether President-elect Biden has the capability to move Congress. So I think a lot of people will hold firm despite what they've seen. But anybody who's sort of on the fence and who's concerned gravely about the future of the Republican Party might well swing. And I think the greater damage is perhaps less that phone call. It's the Republicans behind President Trump who are willing, who've said that tomorrow they will contest the certification of the vote. Those 12 Republicans in the Senate, well over 100 Republicans in the House. That, I think, is what will worry many Republican voters more than the president himself.
How long will we talk about that phone call, Leslie? Are there going to be legal implications for this, or is it something that the Democrats, don't want to touch because it could backfire?
Oh, I think we'll talk about the phone call for quite a long time. I mean, we're going to be talking about many things. When President Trump is out of office, as we know, there will be many cases that he will be facing at the state level. This will be a significant one. But the momentum in the United States is so much focused on the vaccination, on the pandemic, on the economic crisis. And as soon as a new president is in office and a new team, there's going to be so much forward momentum on policy, on governance. This will be an ongoing story. I don't think that it's going to be on the front page of Bloomberg News, but I think it's going to be there. It's going to carry on.
Leslie, what are you expecting from Joe Biden? I mean, a lot will depend, of course, on whether he has a Senate or not. But what are you expecting from Joe Biden the first 100 days? Does he need to almost show to Americans that he's not too left-wing?
Well, you're right to suggest that the Republican Party and the president and many of those, certainly those up for election today, are trying to frame the Democratic Party as being socialist, as being all about the defund the police and about diversity. But I think, the Biden team has made it very clear that they have a very clear agenda. They're going to be trying to move very quickly, both on the international agenda, bringing America back into the Paris Accords, back into the WHO. It sounds like there will be a movement into the JCPOA. We heard Jake Sullivan talking over the weekend with Fareed Zakaria, laying out his idea of foreign policy, really building those alliances, reinvesting in those alliances with Europe with an eye towards thinking about China, obviously thinking about that investment deal that the EU has negotiated, despite America's, I think, the Biden team's desire that they would have held back a bit longer. And on the domestic side, so much will come down to these votes today. The ability of the Biden team to push forward their spending packages, to really move forward policies on climate, on immigration, on taxes. All of that will hinge on how effective they are in winning these two races. But of course, they have the levers of regulation and of executive orders. So in a lot of ways, a lot of capabilities. But I think the thing that will be visible is what they can or can't do through Congress when it comes to domestic policy.
Leslie, thank you so much. Leslie Benjamuri there from Chatham House stays with us, and we'll talk a little bit more about, of course, what Joe Biden can do in his 4 years in charge. Now, coming up, Secretary of State Mike Pompeo says the Iran risks ramping up aggressive behavior with the change of U.S. administration. So we'll also take a look at our exclusive interview. This is Bloomberg. is Bloomberg Surveillance. I'm Francine Lacqua here in London. Now, Secretary of State Mike Pompeo says the Trump administration has made the world a safer place than it was 4 years ago, and that the U.S. now has a more realistic approach to Iran and Israel.
Would you say by pulling out of the agreement with Iran on nuclear weapons and nuclear materials, we gained a benefit? Because it seems that they have actually begun to develop more nuclear enriched facilities than they had before. So what would you say has been the benefit of pulling out of the agreement that we had with the Iranians?
I'll say three things. First, when President Trump came into office, the Iranians were growing their economy at 5, 6, 10% a year, and they were doing so with American wealth that was funneled through European companies that were doing business there, with the famous money that the Americans shipped to them to get the deal done. All of this was creating wealth and capacity for the kleptocrats and the theocrats in charge of the Islamic Republic of Iran, and it was threatening the United States of America and our people. Their capacity to foment terrorism around the world was expanding. That's not the case today. Simply not. They have reduced their ability to underwrite Hezbollah, the Shia militias in Iraq. The work in Syria has now become more costly for them with the Caesar Act, where we put real sanctions on Iranian activity that's taking place there and on the Assad regime. We have diminished their capacity to inflict risk and security threats to people in the United States of America, and indeed to people all across the world. One of the core critiques from my time in Congress, David, you'll remember I opposed the JCPOA vehemently when I was a member of Congress as well, was that the Iranians could start up their centrifuges anytime they wanted to. This was a deal where they'd made a promise that they wouldn't, but if they wanted to start their centrifuges up, in a snap they could. And you've seen it. You've seen it. As they now think they may have a president coming to office that will do a deal with them again, they're going to raise their level of activity to threaten. And so that the Europeans and the United States will once again kowtow and enter into a deal with them that presents them with enormous opportunity in America and the Gulf states with real risk. You need look no further than the Gulf states and the Israelis, the people who have to live in close proximity to the Islamic Republic of Iran, to understand that the approach that the Trump administration has taken with respect to Iran was the right one, and that we ought not go back to the policies of the previous years to our time in office.
There was a concern that on the first anniversary of Soleimani's death, that there would be an attack by Iran on some U.S. facilities somewhere. So far, the first anniversary has passed, and that hasn't happened. But are you still worried that there will be some retaliatory attack by Iran?
Look, the threat from the Islamic Republic of Iran to make an attack on the United States is something they talk about nearly daily. They tweeted about it again over the weekend. They threatened the president. They've threatened me and other senior leaders of the United States government. They threaten Israel nearly daily. Yes, we're on guard. We're always ready. It's been the case for 4 years. It will be the case so long as I'm the Secretary of State and President Trump is our president. We will be prepared, and we will do the right things to deter them, to prevent them from having the resources to inflict costs. Now, 40 years on, right? 40 years plus, David, this regime's been there threatening Israel and the United States. We've done the right things. We've put America in the right place to convince the Iranians that this is a bad idea. And if they decide to take action, I am very confident that the Trump administration will respond in a way that President Trump talked about and President Trump tweeted about now, I guess, a week or a week and a half ago.
Well, that was Mike Pompeo speaking to David Rubenstein, and you can catch that a little bit later on the David Rubenstein Show. Still with us, Leslie Venjamiri from Chatham House. Leslie, how much will Joe Biden, once he becomes president, actually focus on foreign policy as opposed to domestic issues?
Well, if you listen to the Biden team, as we all have and continue to do, they're making it very clear that domestic policy and foreign policy are two sides of the same coin. Strength abroad has got to be premised on what works for Americans, what works for the U.S. middle class. I think we're going to see an immediate move into thinking very strategically about America's foreign policy from day one, reinvesting in alliances in order to do that, really working very carefully with the EU, with Europe, with the UK, on the challenges of China, of trade and investment, on the question of the JCPOA, the Iran deal, and any number of broader strategic questions. But clearly the domestic agenda will occupy so much of the president's time. And I think the fact that he's taken Susan Rice and put her in a domestic role shows both the intention to integrate the two sides of the Biden agenda, domestic and foreign, but also the supreme importance that will be placed on domestic policy, on investing in the economy and infrastructure, and really in the immediate days on delivering that vaccination. He's talking about a 100-day, possibly mask mandate. So bringing the numbers down, getting the vaccination out, and then really taking longer-term policies to really bring the economy into a good place. And that's going to, that is where the foreign policy agenda and the domestic agenda really have to work.
The U.S. seems so divided, Leslie, right now. What can, President-elect Biden do to try and make sure that people that voted for President Trump feel like Biden is also their president?
I think this is, this is the most important story that we're going to be watching in the U.S., the division, the polarization, but really across the populace. One of the concerns that I have is how do you bring back the white working class while pursuing an agenda that's very necessarily and importantly focused on racial justice, which is clearly important to the Biden administration, but does alienate. If you listen to Americans across the middle of the country, white Americans, there's no doubt that they are concerned that they are being left out of this, that it is not about them, that it is about people of color. So this is a really difficult set of policies to conjure up that will speak to both. Now, the Biden team is hoping to be able to deliver a broader stimulus package if the races in Georgia go their way. That will be easier. And a lot of those benefits will actually deliver concrete material outcomes for both of those constituencies, right? Diverse populations as well as white working class Americans. So there should be material benefits that can speak to both. But I think at the rhetorical level, and on some policies, questions of affirmative action, it's going to be very difficult to build some of those bridges. But I think they have absolute awareness that this is what is critical. There's also, Francine, as you know, the key question of how you get people back into a conversation that is fact-based, that is unified around a certain set of facts and debates where they can even continue or begin to consider policies carefully. Right now, we're almost in a fact-free universe in so much of the America, in so much of the media in the U.S. that people are absorbing. It's quite disturbing.
Leslie, thank you so much. Leslie Benjamin, their head of the U.S. and America's program at Chatham House. Now, coming up, delisting U-turn. The New York Stock Exchange has scrapped plans to delist Chinese telecoms companies just 4 days after announcing the move. So we look into that next, and this is Bloomberg.
Climate change is the defining issue of our time, so we've redefined how we cover it. With clear data and rigorous journalism, we rise to the scale of the challenge to reveal the breadth of possibility. We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
It is critically important that the markets stay open in this time, as opposed to trying to take breaks in the middle. I think that that'll just push off the situation a little bit, but actually could create other pent-up issues if you do close the markets.
Economics, finance, politics. This is Bloomberg Surveillance. I'm Francine Lacqua here in London. Let's get straight to the Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. UK Chancellor Rishi Sunak is rolling out £4.6 billion of new support to help businesses through the lockdown. Retail, hospitality and leisure companies will be entitled to a one-off grant of as much as £9,000. It adds to the $280 billion the government has pledged so far to support firms and workers.
The next few weeks are going to be difficult, but the end is in sight. We are vaccinating more and more people every day. So that's why we're redoubling our efforts to protect businesses, jobs, and incomes.
Now the era of cost-cutting and asset sales may be over for the world's largest cement maker. Bloomberg sources say Lafarge Holcim is in talks to acquire a roofing unit of Bridgestone. Firestone Building Products is expected to fetch more than $2.5 billion. A deal may be reached as soon as this week. JP Morgan is seeking to establish another Chinese joint venture in wealth management. That's amid a global rush to capture a piece of the market that's expected to grow as much as $30 trillion in 2023. Sources tell Bloomberg JP Morgan is in preliminary talks with China's merchant bank, expanding on its strategic partnership. And finally, some entertainment news. Period drama Bridgerton is on pace to be one of the biggest hits Netflix has seen ever. The series is set to be watched by more than 60 million households in its first 4 weeks, making it the 5th largest debut of any show on Netflix. Even so, it's unlikely to top the Spanish crime series Money Heist or the documentary Tiger King as the most watched programs released in 2020. And that's your Bloomberg Business Flash. Francine.
Yeah, I've heard of Bridgerton. Thank you so much, Leanne Gerrans there with the very latest on our top stories. Now, the New York Stock Exchange said it will no longer delist China's 3 biggest state-owned telecommunications companies, backtracking on a plan that had threatened to escalate tensions between the world's largest economies. Joining us now is Bloomberg's reporter Gregor Stewart-Hunter in Hong Kong. Gregor, thank you for joining us. So what exactly has been the response to the news in Asia?
Yeah, well, we knew that this delisting was going to be a messy process, but I don't think we thought it was going to be this messy. The about face today has really been a bit of a reputational hit for the New York Stock Exchange. I'm going to read a selection of comments from analysts in ascending order of venom. So quite unexpected was one, bizarre is another, rank ineptitude, and just pathetic. So people not being terribly kind about the whole thing. Stocks, on the other hand, are taking this as a bullish signal. The telecoms companies themselves are all up between about 3 to 8% apiece. There was a short-lived bump for CNOOC, an oil company, also in the Pentagon's list, but which hadn't been mentioned for delisting, although that closed the day around about flat. And the CSI 300 index of onshore Chinese shares rallied to surpass the highs reached during the 2015 bubble. So the market interpreting this is quite a bullish signal.
Gregor, why are these Chinese companies listed in New York anyway?
Yeah, China is quite well represented in the New York Stock Exchange over the past few decades, really because of the youth and development status of the domestic exchanges. Companies had sought out listings in the US as the world's deepest and most prestigious capital markets. Since year 2000, that fundraising has exceeded $144 billion. And while the narrative has started to change during the Trump era, the fundraising has still continued at a pretty steady rate. The threat now, though, that they might be delisted in the US has been something that's been really keeping company executives awake at night for much of the past few years. So many of the internet companies which had been lured to New York in the first place, names like Alibaba, they had sought secondary listings in Hong Kong as the city's exchange weakened investor protections, and managed to lure back a couple of other companies as well. So New York is not as critical to their plans, perhaps, as it was in the past.
Thank you so much. Our Bloomberg reporter there, Gregor Stewart Hunter, in Hong Kong, joining us this morning. Now, this is what the markets look like. A lot of the focus, of course, is on dollar. If you look at Chinese stocks, they were at a 13-year high. That's how they closed the session today. Bloomberg surveillance continues in the next hour. We look at Georgia, we look at lockdown in the UK, and we look at vaccines. This is Bloomberg.
Another day of risk off across the financial markets. We bring you special coverage of all the price action and implications here on Bloomberg Television.
Of discontent, England goes back into a 6-week lockdown in an attempt to stop hospitals being overwhelmed. Georgia on my mind. Joe Biden and Donald Trump hold rallies ahead of a critical runoff election that will decide which party controls the Senate. Now, the New York Stock Exchange scraps plans to delist China's top telcos in a big U-turn with little explanation. China Mobile amongst those sharply higher. Well, good morning, everyone, and welcome to Bloomberg Surveillance. I'm Francine Lacqua here in London. Tom Keene in New York. Tom, Georgia. Of course, that will set the case for what the Biden presidency will look like even before he gets to the White House. So we look at Georgia, but we also look at lockdowns in England that will last for at least 2 months, and we look at the implications for vaccine rollout.
Yeah, Georgia front and center on so many different planes here, and it really almost folds into the New York Stock Exchange bombshell from last evening. We'll have a lot of coverage on that. I thought Gregor Stewart there was just really wonderful in his coverage from Hong Kong. But you're right, Francine. From where we are across the Atlantic and the way America's dealing with this, these announcements from Scotland and from London, from Prime Minister Johnson, they're absolutely stunning, aren't they?
They are, Tom, but actually I had a good briefing, by Sam Fazeli, and I've been hearing this more and more and thinking about it. The main concern is also that you can't actually vaccinate whilst the pandemic is raging because there's more chances of the virus mutating, and something that I hadn't thought about. So this is also critical to the infrastructure or of how you distribute the vaccines. You need to get that R number down before you do that safely. We'll have plenty more on that throughout the day. And markets, if you look at dollar and gold, maybe they tell you something. Let's get straight now to the Bloomberg First Word News in New York City. Is Ritika Gupta. Hi, Ritika.
Morning, Francine. Tom. Joe Biden and Donald Trump campaigned in Georgia the day before a crucial election will determine who controls the Senate. All Republicans have to do is win one of the two seats and they'll maintain their majority. Biden told voters in Atlanta that, quote, the power is literally in your hands. President Trump revisited his claims that vote fraud robbed him of the election. And President Trump's no-holds-barred attempt to overturn the election results is fracturing the Republican Party. His allies in the party are sparring with conservatives in Congress who say the Constitution doesn't give them the power to overturn the vote. Joe Biden's victory will be affirmed tomorrow in Congress, but at least 12 Republican senators and dozens of House members will object to vote totals in several battleground states where the president claims there was fraud. Cleveland Fed President Loretta Mester says the U.S. economy will need steady, continued support from monetary and fiscal policy throughout this year. In a speech last night, Mester said the economy had weathered the pandemic better than she had anticipated. She also expects a new $900 billion relief package will boost the economy. And oil prices steadied after dropping the most in almost 2 weeks. OPEC and its allies unexpectedly suspended their talks due to a disagreement whether to raise output in February. A majority of members opposed Russia's proposal for another supply hike. Discussions resume today. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. On the equity markets, after what we saw yesterday with the VIX out over 29, we come back in 29 to 27 right now, and the VIX futures give us up 8, Dow futures up 67 as well. It is in bonds today, as in foreign exchange yesterday, where you see the story. There's any number of ways to measure inflation expectations. What you need to know is the real yield, the inflation-adjusted yield, has come down to a greater negative number, a negative 1.10 right now, a little bit more negative 12 hours ago, but nevertheless, the story here is rising inflation expectations, and as you mentioned, Francine, you see it in gold.
Yeah, and you're absolutely right, Tom. I have a great, actually, inflation chart looking at the 10-year that I pushed out also on social media. Now, European stocks are fluctuating. U.S. futures are doing the same. Again, traders trying to figure out concerns about the impact of this, rising cases of COVID-19, but also bracing for these key U.S. runoff elections. And then you look at dollar, as you said it, Tom, dollar falling, gold holding on to Monday's gains. We'll have plenty more, of course, on treasuries edging lower after some of these inflation expectations. So both Joe Biden and Donald Trump holding rallies in Georgia ahead of the critical Senate runoff elections today. While the president-elect promised more pandemic relief, President Trump revisited his claims that voting fraud robbed him of the re-election. The two seats up for grabs will decide who controls the Senate. Well, joining us now is Thomas Gift. He is UCL Director of Center on U.S. Politics. Thank you so much for joining us, Thomas. When you look at turnout is always key. It's more so in Georgia than ever before. Will people turn out in droves to vote?
Well, all indications at this point, if you're just looking at early voting and if you're looking at absentee balloting, is yes. Almost 3 million Georgians have already come putting their ballots in the mail. And I think that it bodes very well for record high turnouts, at least for a runoff in this Georgia election. I think everyone in this state realizes that the stakes are incredibly high. Democrats have been doing the best that they can to mobilize their base. Same on the Republican side. So I think that we're going to see big numbers today.
How is it too difficult to know which way it will go? Thomas, I don't know whether the phone call that President Trump had with Georgia officials sway the minds of voters.
Well, the polls certainly suggest that both runoffs are almost in a total dead heat. Current 538 data show Democrats John Ossoff and Raphael Warnock with very slight edges in both races, but only a couple percentage points separate the candidates, and that's well within the margin of error. In many ways, I do think it's closer than many experts predicted. And in large part, I think that's a function of some of the changing demographics in Georgia. But the fact that Democrats are within striking distance here has to be encouraging to them.
Thomas Gift, thrilled that you're with us today on what's truly an historic day. And folks, we'll have tons of coverage on this up through David Weston with some coverage tonight on those election results. Professor Gift, what fascinates me here is Georgia leading the demographic shifts of this nation. Is there a middle now in America, and critically, a la Georgia and the expansion of Georgia across the nation, will there be a middle in America 10 years from now?
Well, one of the points that you made in a show the other day, Tom, is that this isn't Newt Gingrich's Georgia. And I think that that was a really well-put statement. It's much more diverse. In addition, we're seeing demographic shifts from rural to suburban population centers, including higher numbers of college-educated voters. That's making the state more in play for Democrats. You see same demographic trends, for example, in Texas and some of these other states.
Well, I don't mean to interrupt, but this is absolutely critical. Is Georgia the front runner for Texas and Florida to become more Georgia?
I think it's kind of the leading indicator at the very least. I mean, if we see some of the same demographic trends, it's all going to point in a very good direction for Democrats. Of course, one of the stories that we saw coming out of the 2020 election is that it's not just, all minority voters are certainly not voting in the same direction. There was a little bit more nuance, for example, in particular with Hispanic and Latino voters, but it's all part of this larger demographic story.
Yes, but we've seen a lot of follow-up to November 3rd that Hispanic and Latino voters are not an homogenous group. I mean, there's some real nuances there in what we saw. Are we going to see the same underestimation in Georgia where we talk about a homogeneity of Georgia voters, and what we're going to find is terrific nuance from Statesboro to Atlanta?
I think that's very likely, Tom. I mean, there is just so much nuance, and anytime you just treat demographic groups as monolithic voting blocks, I think you're going to miss or conceal a huge amount of variation within those groups. Certainly in Georgia in particular, the black vote is going to be absolutely critical. That's one demographic that has increased in terms of the number of eligible voters sizably over the past couple of decades. Democrats really want to make sure that they turn out today.
Thomas, how close will it be? Will we have to wait days or even weeks for, exact voter count?
Well, I think it's very possible. Like the November 3rd presidential election, it could be several days simply because it takes a while to process all of this information. And at the same time, if we do get a scenario where it's contested or we need to go to a recount, that could really get messy, especially with all the contestation we've seen surrounding the veracity and electoral integrity of these votes.
Thank you so much. Thomas Gift there, UCL Director of Center on U.S. Politics. Now, coming up tonight, of course, we'll bring you full coverage of the Georgia Senate runoffs. That will be fronted by David Weston and Kevin Cerulli. That's at 7 p.m. Eastern Time. That's midnight in London. And this is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Are you worried that people won't take the vaccine?
We remain concerned about vaccine hesitancy.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here? It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Our generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
We must therefore go into a national lockdown which is tough enough to contain this variant. That means the government is once again instructing you to stay at home.
Well, that was the British Prime Minister, Boris Johnson, announcing a national lockdown in England to prevent a surge of COVID-19 cases. Well, joining us now is Jane Foley, Rabobank Head of FX Strategy. Jane, we want to talk about dollar. I know Tom has a lot of questions on dollar dynamics and how low it can go. And then we want to talk about pound. But if you look at these two currencies, what do you think will be most interesting in 2021?
Well, you're right. They're both very, very interesting. But I mean, it is the dollar that is the common denominator, if you like, of the FX market. And I think most people will be watching that really quite intently. We've had a huge amount of weakness since last spring. The market consensus very much focused on further dollar weakness. But I think the big question is that can that sustain throughout the whole of this year? A large part of the dollar weakness is based on the expectation that the Fed isn't going to do anything on policy till 2023, that we won't have inflation until 2023. But many people are really beginning to really argue against that. There it seems to be quite a polarized view of US inflation right now. And if we do get more inflation in the US, well, the Fed will have to potentially put up nominal interest rates perhaps sooner than the market's currently expecting. And that could bring an end to the dollar downside.
Jane, where does this inflation actually come from? I know, Tom has a great chart. I'm trying to make a break-even charts. This is longer term. Like, what's the case for it happening actually this year?
Well, I mean, I'm not necessarily a big supporter of the fact that we will get inflation. I mean, from my point of view, I'm still really quite worried about the labour market, and I think many economists are, and particularly the fact that the G10 has not been very successful in lifting wage inflation, really for a number of decades, for a variety of reasons. But the inflation hawks, such as Dudley, the former Fed Dudley, last month, he argued on Bloomberg, he put 5 points forward for inflation, why we might be surprised to see greater inflation they're anticipating. And he included reasons like more fiscal policy, for instance, that the fact that the Fed is allowing, it's adjusted its policy to allow for an inflation overshoot. That's another one. And the fact that when the economy does reopen, perhaps in the second half of the year, that resources won't be correctly aligned and that we will see some squeezes there. We will see some prices as some of the suppliers have to try and ration the supply in order to meet the demand. So a variety of reasons.
Jane, Ibrahim Rabari over at Citigroup, who joins us often, today stunned me with not only a dollar weakness call, but the idea that we could see double-digit % move in dollar weakness. Guessing the magnitude of all this is just so difficult. Game your magnitude now of dollar weakness.
Well, of course, it depends on which currency pair that you're looking at. And I think against most of the G10, we wouldn't be looking at double-digit moves. But I think if we were going to see any double-digit moves, we'd have to move into the realms of emerging markets. And certainly we could see more volatility in some of those currencies. But I think really where the market consensus is looking right now is looking really very much towards Asia. And the reason for that is pure and simple. It's the fact that Asia appears to have had a lot of more success at really containing the COVID crisis, market focusing very much on Chinese growth last year, expecting that recovery to continue, and taking with it, countries such as South Korea, for instance, and other Asian countries.
And I'm just looking now at renminbi. The news flow this morning, folks, has been so large. I'm just now looking at the 6.46 yuan, showing that jump condition of yesterday. Jane Foley, we had a guest on yesterday who started our year by talking about the asymmetric effect of all this dollar weakness. Is this dollar weakness about the strength of Asia, or is it a statement on America?
I think it's both. But for the last few years, there's been quite a good correlation between, say, EM stocks and the dollar, so that when the dollar goes down, the EM stocks go up, and vice versa. So that there really is when one is doing well, the other tends to be doing badly. So I think this is a statement of both. But, I have this view that the dollar these days doesn't necessarily mimic so much US fundamentals precisely. It is a function of itself. It's so liquid. Fed policy, very, very, very important, but maybe less so at the US budget deficit, the fiscal policy and the politics. But, this can still create some drive into or impact on risk appetite. So, for instance, we still haven't seen the end of the election. That could potentially create some safe haven bids for the dollar in the next couple of weeks. But I think fundamentally, as long as the view is that cheap monetary policy is going to keep on undermining the dollar and push people into higher yields, you're going to see the consensus view towards the softer dollar this year.
Jane, there was a quite captivating piece by the OECD chief economist, Laurence Boone, about deficits and how the big danger is that Western economies actually start doing austerity too quickly. Is there a danger of that in the UK? Is there a danger of that in the US?
There is always a danger of that, but we haven't necessarily heard those voices. Now, first of all, we got to see who in the US who wins this Georgia runoff, and I think that will perhaps partly answer that question, whether or not the Democrats have control of the Senate or the Republicans. So that will help towards answering that question in the US. I think in the UK we have seen voices, excuse me, particularly say in some of the more Tory run publications, that we do need to start thinking about the budget deficit, about taxation, tax rises, etc. But I think in the here and now, that is not today's story. For instance, we've just seen this morning the Chancellor of the Exchequer announce more support for businesses in the wake, of course, of last night's announcement of further COVID restrictions for England that could run into March. So it is not today's story, but inevitably it will keep on bubbling up. And if we do see the country coming back into life in the second half of this year, that's when we're going to hear more about that.
What do you do with some of the emerging market currencies linked to dollar?
Well, I think emerging markets, given the market's current mindset, are likely to do pretty well. As long as we have a position where we see, the market hunting for yield. And when you look at, Treasury yields, that they are so low, when we anticipate that the Fed could carry on leaning on that curve, the market is going to be hunting out for yield. And Asian EM seems to be, really attractive to many investors' minds now. At least that's what the consensus is suggesting. So I think EM in the current environment will do well. I think the change could come if the market changes its point of view and begins to think, oh, you know what? Maybe the Fed isn't going to carry on leaning on that curve for the next few years. And that, of course, would come if we do have inflation.
Jane Foley, thank you for the Pacific Rim update. Really, really appreciate that this morning. With Rabobank, of course, and we do this with, again, renminbi 6.46 yuan per dollar, sterling 135.85. We give up a little bit of the fireworks yesterday that we saw on foreign exchange, with a real focus now on fixed income and inflation expectations. Some of the themes this morning are Chanel Ivasek in conversation with Mr. Solomon of Goldman Sachs on, among other things, this story of the New York Stock Exchange. Does Goldman Sachs Asset Management have to sell their China shares? Look for that in the 8 o'clock hour. This is Bloomberg. Good morning. Futures up 7.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance. I'm Rishika Gupta with the Bloomberg Business Flash. The New York Stock Exchange has made what one analyst calls a bizarre U-turn. The exchange says it will no longer delist China's 3 biggest state-owned telecom companies. It's backing off a plan that had threatened to escalate tensions between the U.S. and China. The New York Stock Exchange originally said it would remove the shares to comply with a U.S. order barring investments in businesses owned or controlled by the Chinese military. And JP Morgan says Bitcoin could rise to $146,000, roughly 4.5 times more than what it sells for today. But there are a lot of ifs. The bank says the cryptocurrency could reach that lofty prices only if it matches private sector investment in gold via ETFs, bars, or coins. Bitcoin is seen as competing with gold for investment flows. For the second year in a row, Bill Ackman's Pershing Square Capital Management reported a record performance. The firm returned more than 70% on its investments in 2020. That beat the previous record, 58% in 2019. Ackman scored last year with a lucrative credit hedge put in place during the lead up to the coronavirus pandemic and the subsequent sell-off. And that's a Bloomberg Business Flash, Francine.
Ritika, thank you so much. A lot of the focus, of course, is on Georgia. A lot of the focus is also on what to do with these extra lockdowns in the UK, and this is how markets are reacting. So for the moment, they're unsure exactly how to take it. The European stocks are pretty much steady, but they did fluctuate earlier this morning. Again, they worry about the impact of rising coronavirus cases, and they're also trying to figure out what the U.S. runoff election means in Georgia. Dollar falling, gold holding to gains we saw yesterday, Tom.
What I want to look at is the yield market. Yesterday, it was all foreign exchange with the dollar weaker, pretty much stable right now. But in bonds, there has been a change. Yes, yields higher, then yields come in. But inflation expectations with a vengeance have shifted the dialogue. I'm watching tick by tick the real yield, negative 1.1029 out to 4 digits. And as well, that correlation over to gold, 1949, nowhere near the 2,000 plus level that we saw a record high. But nevertheless, to see gold advancing the way it is, 1950 an ounce right now. Other than that, again, I go back to dollar, and we're watching Canada, Mexico, and such. Coming up to begin the year on our regulation, Daniel Tarullo is very good at this, the former Fed governor. Thrilled that he could join us, and Vice Chairman Daniel Tarullo on the new regulation of a new Biden administration. Much more to speak of with futures up 5, Dow futures up 48. Again, Mr. Paulson of Goldman Sachs in the 8 o'clock hour. This is Bloomberg.
Такой красивый и достаточно яркий проект, который мы надеемся привлечет в первую очередь внимание к необходимости сохранения дистанции.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Give you a sense of the real-time action, the 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
surveillance, a slower news flow in 2021. Maybe not. Francine Lacroix in London, Tom Keene in New York. They may just lock us down at our desks. Francine Lacroix yesterday from the wide west wing of her house in London, and today back at QVS. It's a great and beautiful
Leaving
thing.
homeschooling, Tom.
Folks, you got to understand, when we go to break, Francine and I are doing nothing but worrying about keeping our kids happy in the pandemic. And after that, looking at the news flow. It's extraordinary. Jane Foley knows exactly what we're talking about with Rabobank as she studies foreign exchange within a lockdown. Jane, how is pound sterling affected by this strange word, a complete lockdown?
Well, I think poor old sterling really is on the back foot again. I think for many people at the end of last year, there was hope that with a Brexit deal announced before Christmas, that sterling could get some reprieve. But really, that reprieve has been quite limited. Certainly, you see that when you measure sterling against the euro. And of course, this lockdown, this tighter lockdown, which could see England into lockdown measures maybe as far as March. We are seeing, again, this possibility of a double-dip recession and of course, this discussion about another interest rate cut from the Bank of England. So sterling definitely on the back foot. It doesn't look quite so bad against the US dollar, but of course, that has been masked in the last few months, really because of dollar weakness, but it is off its best levels.
Well, I want to go there because I'm more guilty of this than anybody in the industry, and frankly, I think all of Bloomberg were very cable-centric here. Tell us of the dynamics of euro sterling in the last number of days.
Well, really, we can take it back for the last number of months. And for instance, for quite a long time, euro sterling hasn't spent that much time below that 90 level. And this goes on for a year and a half or so. And it was hoped that perhaps, given there was a trade deal between the EU and the UK before Christmas, that we could see some more gains for sterling. But it's back above that 90 level this morning. Of course, at the end of last year, just when it looked as if we were going to get that Brexit deal, that coordinated with news of further Tier 4 restrictions for millions of people around the London area and beyond. And now, of course, that news has become worse. The COVID-related news was worsened, and we're now in full lockdown. So now the market is very much focused on the possibility that we could see this double-dip recession in the UK. And, of course, layered on top of that, no one really knows precisely what sort of impact Brexit is going to have on the UK economy in addition to the lockdown restrictions.
Jane, given that, how much of a double-dip recession was already priced in?
Well, I think as we went into the end of last year, when we did have those additional Tier 4 restrictions and we had millions of people on really tight restrictions within London, I think the market really began to then look ahead to a terrible Q1 for the UK. Now, the thing is, I suppose, if we're looking at euro sterling, we've got to say that it's not just the UK which is going to have tighter restrictions. If we look at Germany, for instance, Merkel is expected to announce the tighter restrictions there. She's talking with some of the regional leaders today and as she was yesterday. So Germany, of course, many people in Germany looking for a nasty Q1 there. France, it will be similar. Maybe Italy, we've seen more restrictions in Italy being announced too. So for the whole of the continent, really, this is not going to be a very pretty first quarter. And one advantage, I suppose, that the UK has is that the pace of the rollout programme here has been far greater. And the Prime Minister wants to increase it to 2 million a week. Now, whether or not he achieves that, we don't know, but it has been faster. Again, if we look at France particularly, a lot of complaints yesterday about the very, very slow number of vaccines. They speeded it up yesterday, but it's going to take a long time to catch up with the UK. Now, if the Europe doesn't accelerate the pace of its vaccine rollout, well, that's going to push back the recovery story for Europe. And you could see sterling benefiting from that at some point during this quarter.
Jane, what happens to renminbi? So there's a number of factors at play. I know, stocks in the U.S. were focused on this NYSE story, but stocks in general in China, I think, finished the session at 13-year high. What happens to yuan from here until summer?
Well, it could be higher. Now, there's a couple of reasons attached to that. First is this perception that investors have that China has a lot of control over the COVID story, that its recovery has been good in recent months, and it could be better. You've seen a lot of flow from dollars or from Europe into Chinese bonds. A lot of consumers, a lot of investors in Europe and the US looking to China for yield. Now, there are concerns about debt and defaults, etc., but as yet, that hasn't really affected international investors. So there is a lot of new interest. And again, this comes with the liberalization of those markets over there as well. Now, yesterday, when we saw the PBOC setting the midpoint for the renminbi dollar, it didn't necessarily suggest that the market had become too bullish on the renminbi. And again, that was an encouragement for the market. So the market feels as if the renminbi can go firmer. And I think for now, that it can. A big potential for this also is this trade deal signed between Europe and China, and the indications from the PBOC that it wants to look more at the euro renminbi exchange rate too. And that, of course, has not seen the same sort of movement as the dollar one.
Just a terrific brief, very valuable. Jane Foley, thank you so much, with Rabobank, head of foreign exchange strategy. Futures up 5, Dow futures up 43. Again, I'm watching that negative yield, the real yield, negative 1.1014. That is extraordinary. Always extraordinary with our first word news. Here's Ritika Gupta.
Thank you, Tom. It is election day in Georgia. Both Donald Trump and Joe Biden held last-minute campaign rallies on the eve of a vote that will determine which party controls the Senate. The Republicans need to win just one of the 2 seats up for grabs to maintain their majority. The Democrats need to win both seats. Meanwhile, Boris Johnson is counting on 2 million coronavirus vaccinations in a week to help the UK recover. The country went back into lockdown in an attempt to keep hospitals from being overwhelmed. The Prime Minister warns of hard weeks ahead, but he hopes to give shots to almost 14 million people at the highest risk by the middle of February. And Saudi Arabia has opened its borders with Qatar for the first time in 3 years. That's a big move towards ending a dispute that split the oil-producing region. It also complicated U.S. efforts to isolate Iran. The UAE, Egypt, Bahrain, and also took Saudi Arabia's side. They accused Qatar of meddling in their internal affairs and building ties with Iran. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Thank you so much again. Futures up 6, Dow futures up 50. The VIX out to 29 has come in 2 points, 2 big figures to 27 as well. Later on Bloomberg Radio, on Bloomberg Television, a simulcast. James Athey will join us with Aberdeen Standard. He's really, really good. It's synthesizing the correlations of the markets. Looking forward to that discussion as well. Again, Mr. Paulson of Goldman Sachs. Somehow the New York Stock Exchange may come up. This is Bloomberg. Good morning.
Preston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
If the liberal Democrats take the Senate and the White House, and they're not taking this White House, we're going to fight like hell, I'll tell you right now.
We need you to vote again in record numbers, to make your voices heard again and again, to change Georgia, to change America again. And this is not an exaggeration. Georgia, the whole nation is looking to you to lead us forward, for real. You know it.
We welcome you on Bloomberg Surveillance to do our coverage of these elections in Georgia. To remind you, there are 2 elections for the Senate in Georgia, not one. It seems unusual, but again, that's what happens when you have odd events. You can sometimes have 2 elections, and then, of course, even odder, this runoff. Our Emily Wilkins is covering this in Atlanta, and she joins us this morning. Who won the vote last night, Emily Wilkins, the president-elect or the president?
You know, both Biden and Trump were here last night. Both of them gave rallies in their own signature style. You saw Biden come out and remind Americans about what his policy needs to be. And he included those $2,000 individual stimulus checks, saying that if Georgians elected Democrats, that they would wind up being passed. Trump, on the other hand, gave a giant rally in a part of the state that's very friendly towards him. He did encourage people to come out and vote, but he also spent a lot of time talking about debunked claims about the November election being fraudulent.
Did he talk about his 2 Republican Senate candidates? I mean, the zeitgeist out of Washington this morning is he was off script. Is that accurate or no? Ms. Loeffler there right now. Is that accurate or not?
Trump's style is to be off script. I mean, he did mention Kelly Loeffler. He did mention David Perdue. He did give both candidates a time to address before the crowd. But much like his other rally back in December, a lot of this was Trump getting upset about the results of the November 3rd election and incorrectly stating that there was fraud.
And we should point out, Francine Lacroix, that Mr. Perdue, Senator Perdue, I believe is in some form of quarantine on COVID. That was why he did not attend that event.
Yeah, very important actually to make all of our audience aware of that. Emily, overall, what are the polls telling us? So I think we're expecting some kind of record turnout. And of course, Democrats need the 2 votes to get control of the Senate. Republicans only need 1. Is it just too close to call at this point?
It is incredibly close to call. I mean, everyone went into this runoff seeing it as the Republicans to lose. They're very, very good at getting their base to turn out in elections like this. But Democrats, knowing that the Senate was on the line, I mean, everyone has just poured hundreds of millions of dollars, volunteers from all over the country. Resources have just flooded into Georgia to make sure that people are going to get out and vote. We have already seen 3 million Georgians go ahead and either vote early in person or vote with absentee ballots. Those are huge numbers compared to what you usually see in a runoff election like this.
Who's most likely to go out and vote, Emily?
So normally the people who vote in runoff elections are the party's core base of supporters. These are individuals who have voted numerous times in the past. They're very loyal to the party. But the thing is that a lot of Georgians who have come, Democrats have tried to mobilize them. They're first-time voters, or they haven't voted in a runoff before. And so it's been a lot of election education to make sure that people know what they need to do to turn out and vote.
Emily, we had a viewer email in, Al from New Jersey emailed in, and he has a really good question, which I think maybe you can answer, Kevin Cirilli. Is the voting turnout in the voting dynamics of Georgia because of the pandemic, or is there a permanence to it? Is there a permanence to this registration revolution?
Yes and yes. I mean, we have seen voter turnout expand across the country. Experts definitely think that the pandemic does have something to do with it. But you can't ignore the fact that here in Georgia, for the last decade, there have been a number of grassroots groups that have really been working to get out the vote. Stacey Abrams' name gets tossed around a ton. She's definitely one of the individuals. Other organizations have helped as well.
Absolutely fascinating. Emily Wilkins with us through an exhausting day in Georgia this Tuesday of January, a runoff vote. Again, David Weston leading our coverage tonight. And on that, the Georgia Senate runoffs, there will be coverage through the day. No question about that. Here with futures up 8, Dow futures up 63. Look for that direct coverage beginning at 7 p.m. tonight. The Georgia Senate runoffs as well. Right now, with a business flash, this is Bloomberg.
Thanks, Tom. Bloomberg's learned that JP Morgan is trying to set up another Chinese joint venture in wealth management. The bank is in preliminary talks with China Merchants Bank. It wants to expand on a strategic partnership in products set up in 2019. Global banks are rushing to capitalize on China's decision to open its $53 trillion financial industry. Bidding in a 5G airwaves auction in the US has surged past a record at $76.5 billion. There's a frenzied demand for capacity that could send carriers such as Verizon and AT&T to the debt markets to finance the bill. The auction run by the FCC started last month. There was a field of 57 potential bidders. An online sports gambling company, DraftKings, may resume its slide today. Selling restrictions from an October share sale expire, and that could add to recent volatility over valuation concerns. DraftKings is still up more than 150% since going through a public reverse merger in April, but it's fallen 25% from its high back in October. And that's the Bloomberg Business Flash. Francine.
Thank you so much, Ritika. Now, up next, Michael Hirson, Eurasia Group Practice Head for China and Northeast Asia. We have a lot to talk about, including the NYSE reversal on no longer delisting some of the Chinese telecommunications company. We talk, of course, growth, and we talk also Chinese stocks. This is Bloomberg.
新型にはなんと2万点以上前進でついてます。なので2万点あることにより、その情報が取れない、平面がないんですね。なので全てをスキャンすることができるので。どちらにせよ自分のサイズを1回最初から、適正なものを発見してそれを買って、家に届いてきたらぴったり非常にハッピーというのがやっぱりしかるべき姿かなと思ってます。
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance. I'm Francine Lack in London, Tom Keene in New York. Now, we continue, of course, with Eurasia's top risks to 2021. And Tom, a story that, of course, has captured both of our imaginations. The New York Stock Exchange reversing plans to delist 3 of the largest state-owned Chinese telecom companies. That's backtracking on the decision just 4 days after its unveiling. The measure also threatens to escalate tensions between Washington and Beijing, falling in compliance with the Trump administration executive order. The reasons for this reversal at the moment remain unclear. Well, joining us now is Michael Herson. He's Eurasia Group Practice Head for China and Northeast Asia. Michael, thank you for joining us. And before we get to the top risks and how that plays out with the U.S. and China, what's exactly happening in the New York Stock Exchange?
Well, I don't know the full story behind the scenes, but I think, frankly, what we're seeing here is the interagency turf fight within the Trump administration as to how this executive order is going to be implemented. And the guidance has been unclear. And so what we saw from the New York Stock Exchange is, first, a assumption that this is going to be sweeping and that they would be forced to delist these companies. And then with further guidance from Treasury, which has been somewhat on the back foot in this whole process, they have drawn the conclusion that, in fact, no, they don't have to go that far. So I think that's what we're seeing is this slow guidance coming out as first the hardliners in the administration had pushed this move, and now Treasury's had the opportunity to try to limit the full extent of market disruption.
What does that mean, Michael, for how the Biden administration will deal with China?
Well, we'll have to see how the Biden team works with measures like this. I don't think that they're going to be particular fans of this executive order, partly because of how messy the process is, where you've got the Department of Defense deciding which companies should be banned from essentially U.S. financial markets rather than the Treasury Department. But I don't think that this particular issue is going to be important enough for them to reverse it quickly. So I think we'll see this basically held in kind of in status quo, at least for the first several months of the Biden administration, while they wrap it into broader review of China's strategy.
Michael, Tom Keene in New York, good morning. I read in entirety the November 12th executive order by the President of the United States this morning. I read the 3 documents by the Treasury Department as well. This is the most stunning thing I've seen in my present view of investment or my reading of the history of the New York Stock Exchange going back at least to 1903, if not 228 years. Let's cut to the chase. The president did an executive order that looks like it was written, say, by Navarro or someone else. I don't want to speculate on that. And they got crushed last night by Secretary Mnuchin. Is that accurate?
I think that's fairly accurate, Tom. This executive order was rushed out. It's the type of thing that usually would have been from the get-go.
Yeah, but Michael, look, I don't mean to interrupt, but come on, it's 30, 40 paragraphs. It was not rushed out. It was chiseled out by President Trump and his anti-China advisors. That's a fact everybody can agree on. Is this going to end with President Biden, or do we continue these ad hoc procedures with President Biden?
Oh, no, Tom. I mean, it's going to be completely different under Biden. This is the whole process of this executive order is unprecedented.
Thank you.
Clearly this in any normal, I'd say in any typical administration, this would have come out with full guidance from Treasury. They were passive in this process. And as you said, the hardliners in the administration pushed this out with huge questions as to how this novel executive order should be interpreted. And so what we've seen more recently is a bit of a return to normalcy in the sense that the agency that's actually executing this, Treasury, has had to worry about market disruption and fill in the details. The Biden administration will be much more predictable and conventional in this sense.
To your Eurasia Group top risks, then, how would you suspect that China will respond to this? The language speaks of the Communist Party. They've got, I don't have the language in front of me, folks, but it's basically military-industrial complex. It reads like a diktat out of the 1950s, the November 12th executive order. How would you expect Beijing to respond to such language? Do they just wait for Biden?
Yes, they're going to wait for Biden. And frankly, they can stomach, I think, a lot of these ideological attacks so long as the practical impact for China is limited. And let's be honest, this executive order is not really going to deter Chinese military-linked companies from obtaining financing. They've got plenty of financing available from China's state-owned banking system and from other sources of finance. So with symbolic moves like this, Beijing is willing to stomach some of this, especially, as you said, as they wait for Biden to come in and try to reestablish some kind of stability for the relationship.
Michael, what will stability look like? I mean, it was actually a surprise to see a lot of these, Chinese companies on U.S. stock exchanges in the first place. Is it going to be a deterrent? Will Chinese companies just be less present in the U.S. de facto?
I think that, the writing to some extent is on the wall here. Biden is not necessarily, we don't think he's going to take as directly a confrontational approach with the U.S. and China, towards China. But the reason we included this as a top risk is that the broader underlying issues driving U.S.-China tensions are still there. This is a very competitive relationship. It's got an increasingly ideological tinge, and none of this is going to change. So I think we will see growing tensions, increased tensions spilling into financial markets, but it's not going to be because the Biden administration is throwing out executive orders. It'll be more concerns about governance issues, about investors putting pressure on companies over, for example, treatment of the Uyghurs. It's going to be those kinds of, I think, deeper concerns than it's going to be kind of bomb throwing, so to speak, coming from Biden directly.
Michael Herson, thank you so much. A hugely valuable brief on news made overnight as the Treasury Department really walks back that executive order of November 12th. Mr. Herson, of course, with Eurasia Group, and we can't say enough about the terse and the value of their top risks of 2021. It is always a risk to speak with Russell Kosterich of BlackRock, really smart across the different asset classes. We do that next. This is Bloomberg.
We have some good news in terms of vaccines and a chance to overcome the health crisis, but we are not there yet.
We need the fiscal stimulus, and we need it relatively quickly, because I can see where the second wave's coming. You can see consumer spending beginning to get impacted again.
What we need surveillance to be stronger. We need public health measures, because you have no other way at the beginning. This is your best weapon, and you need to use it well.
The good news is that both the vaccines and the therapeutics, in particular the antibodies, are coming along and will start to bring that number way down.
We don't just need more investment in public health. We must also rethink how we value health.
I do believe a targeted fiscal stimulus.
A closed position on Japanese yen, as you can see right here. Just right here. So we have 500 pounds in profit. If you want to make same amount of money like we do, just follow our trades, copy them, and you can achieve the same profit. Or you can get a strategy. You can see it's on a ticker, red one, and you can use on different pairs, stocks, And also you can trade on margin, so it's all explained over there. So good luck.
This morning, Georgia, it is on all of America's mind. It is speculated that the two races are too close to call. The Senate, it hangs in the balance. A toxic cocktail of virus fear, Georgia uncertainty, and the ambiguity of inflation expectations. The stock market and gold, they react. And Trump orders, the New York Stock Exchange reacts, then, quote, relevant regulatory authorities backtrack. On China delistings, China says Trump has, quote, damaged market rule and order. Good morning, everyone. Bloomberg Surveillance. I'm Tom Keene in New York, Francine Lacroix in London. Absolutely extraordinary news flow. And Francine, moments ago, I see that the BBC says the Prime Minister will hold a press conference at sometime London time. What will the nation listen for?
I think, Tom, it's probably Grant. So we had that, press conference that really changed everything yesterday. Local time was at 8 p.m. where the Prime Minister says, look, there's no point in beating around the bush. The R number is too high. We need to keep control of the virus. And so he put a complete lockdown, which by many measures is the third one, but actually is a much deeper lockdown than we had in November because schools are closed, and that will last for 8 weeks. So that's one thing. And then today we heard from the Chancellor about how you support business, because if you close everything for 6 or 7 weeks, then you need to give money, and that was maybe the grant that Rishi Sunak unveiled today that the Prime Minister wants to talk about himself.
It's absolutely fascinating. Of course, a huge difference, Francine, is within the mess of American politics, there's parliamentary process and the strength of Prime Minister Johnson in the United Kingdom. How does Labour respond to what we've seen the last 3 days in the UK?
Well, Labour actually from the beginning of December, Tom, was asking for a lockdown, and they said, look, it's something that we need to do is also make sure that, Christmas, people would have been more careful at Christmas, something that Boris Johnson had refused to do. Now, there is speculation that one of the reasons why lockdown in the UK, Tom, came so late is because Boris Johnson did not want to give in to the demands of Labour. Right. So the dynamic between the two is extremely, extremely important, but really we have a great story in the terminal that explains it very clearly. If Boris Johnson wants to survive as Prime Minister, he needs to take care of the National Health Service, and that explains why there's this pretty big lockdown.
Well, it's good to get back to the calm of American politics after what Francine bravely explained to us. With clarity always, our First Word News in New York is Ritika Gupta.
Thank you so much, Tom. Joe Biden and Donald Trump campaigned in Georgia the day before a crucial election will determine who controls the Senate. All Republicans have to do is win one of the two seats and they'll maintain their majority. Biden told voters in Atlanta that, quote, the power is literally in your hands. President Trump revisited his claims that vote fraud robbed him of the election. And President Trump's no-holds-barred attempt to overturn the election results is fracturing the Republican Party. His allies in the party are sparring with conservatives in Congress who say the Constitution doesn't give them the power to overturn the vote. Joe Biden's victory will be affirmed tomorrow in Congress, but at least 12 Republican senators and dozens of House members will object to vote totals in several battleground states where the president claims there was fraud. Cleveland Fed President Loretta Mester says the U.S. economy will need steady, continued support from monetary and fiscal policy throughout this year. In a speech last night, Mester said the economy had weathered the pandemic better than she had anticipated. She also expects a new $900 billion relief package will boost the economy. And oil prices steadied after dropping the most in almost 2 weeks. OPEC and its allies unexpectedly suspended their talks due to a disagreement whether to raise output in February. A majority of members opposed Russia's proposal for another supply hike. Discussions resume today. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Tom.
Ritika, thanks so much. I'm going to get through the data quick because Cyrilli's going, why are they talking about the United Kingdom? I'm going to look at the real yield. It's real simple here. The VIX comes in, better equity markets off the carnage yesterday, and the real yield, negative 1.10%. That's a ginormous negative number. Francine, was that quick enough?
Yeah, it's quick enough, but actually, you know, if we spend a bit of time on this, it's just you can't figure out what the outcome in Georgia is, and that's probably the one thing that markets want to know to see what President Biden, once he gets into the White House, can get done, Tom. And so that's why, I mean, my data check is also wicked short.
You know, we got to be short. Cyrilli's twiddling his thumbs in Washington going, what are they talking about? Not on lockdown. Our Kevin Cirilli, our chief Washington correspondent. Kevin, I got to rip up the script. I read the November 12th executive order from the President of the United States, 30, 40 paragraphs, hugely chiseled, and then I saw the Treasury documents of the last 3 days or so. It seems to me that the anti-China crew at the White House got crushed by Secretary Mnuchin last night. Is that somewhat accurate?
No. Look, I think when you look from a broader standpoint about U.S. national policy towards the Communist Party of China, it's trending in the same direction. I think there's actually a lot more similarities between the incoming Biden administration and the outgoing Trump administration in terms of the trajectory of the dynamic. But you're right in the sense that there was a division on how best to handle the problem of the Communist Party of China within the White House. They were coming at it from two different solutions. Secretary Mnuchin, outgoing Secretary Mnuchin, is coming at this from, I would argue, a different perspective. But from the sources that I talk with, even like the Mark Warners of the world, the Democrats, there's a consensus that there has to be a change in how the United States deals with the Communist Party.
Kevin, look, Bloomberg is not in the business of speculation. It was a terse one-word sentence. No. The Treasury Department crushed the November 12th executive order last night. Is Mr. Mnuchin on speaking terms with the President of the United States this morning?
Well, I think, quite honestly, the Washington, D.C. is really bracing for a lot of uncertainty in the next 48 hours, to put it mildly, with regards to the Georgia elections and, of course, the certification process in Congress on Wednesday.
Kevin, is it just too close to call? When do we actually even, you think, find out the result?
So election officials in Georgia are saying, Francine, that there will be between 48 and 72 hours until potentially a result is declared. There's a dramatic increase in the number of early votes that have been cast. In Georgia, estimates have it at about 3 million, 31% black vote. That's a dramatic increase. It's outpacing the November results, especially in terms of the black vote. Democrats are optimistic about what those early signs might glean. But the Republicans that I talked to are saying that the president's trip there last night might be able to get turnout in that state, but it's unknown. We'll find out this week.
Kevin, does this replicate the November 3rd election? So if we have many more people voting, if we have a record turnout, does the thinking point towards a possible Democratic win?
That's candidly what Democrats are optimistic about. Yesterday, I spoke with Democratic National Committee Chairman Tom Perez, and he pointed to those numbers. I would just point out that if Democrats win both seats, that they would have control of the committee structure in the Senate, so they would chair the committees, and that's a hugely important piece of information, especially for Bloomberg's audience, in the sense that they would be setting the agenda for all of the committees, and including in the financial services sector.
Kevin, to Francine's good question, in the direction through January and into February, I mean, a lockdown in the United Kingdom until February, when does government get committed in the Biden administration? If we have to wait for Georgia, wait for results, do you assume it's let's go January 20th, or could a Biden administration be delayed in action?
Well, you know, I think that's an important point, and especially what the top priority is going to be, according to President-elect Biden, is 100 million vaccines in his first 100 days. Yesterday, I was looking at some of the government and medical expert data that has been tallied. Israel is the country right now that has vaccinated the largest portion of its citizens now, of course, per population capita. But countries right now, there is a sense that especially in Europe as well as in the United States, there's this sense of which country has this figured out in terms of